Good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Wednesday. It's the 2nd of March, 2022. And today we want to have a look at a topic which is currently getting hot, especially at Admirals. So Admirals just announced that it will offer fractional shares. And what is a fractional share? What can we do with this? Why is this especially of interest for us for saving plans? We might probably consider in our overall trading, respectively investment plan, probably. Why is it also interesting to generate or use fractional shares to generate a cash flow in terms of dividend strategies and so on and so forth? And this is exactly what we want to dig deeper into. Probably fractional shares are also getting of higher interest, especially when it comes to build a diversified portfolio. And then here in this context, in so-called Fangman stocks or in Tesla, for example. So Fangman stocks are those stocks where you can find Facebook, on Apple, Netflix, Google, Microsoft, Amazon, or Nvidia. I just forgot. And also, in addition to that, Tesla, for example, electric vehicles. Probably right now, the crisis, the military escalation in the Ukraine is bringing more market participants now into the position to think about the future and where the focus will shift to, especially when looking over here in Germany, for example, the dependency on natural gas from Russia in this case, how to get more independent in this context, where will the focus lie then in terms of energy, solar, wind, or electric vehicles, electric vehicles in this case, play a very important role. And here the leader in this space certainly is Tesla. Only big issue with this is Tesla stocks are right now trading slightly below 900 USD per share. Has seen a corrective move, yes. I'm also here within the speculation of the Fed rising rates or hiking rates in 2022, but the stock has only come down to 700 USD per share. So if you plan to invest, let's say 200 USD a month into a Tesla stock, because you say, well, this is a great company, it's a great growth outlook, and electric vehicles especially will play an important role in the next, say, 10 years minimum. There's massive growth potential, but you just wondered how to invest there. Well, probably, you thought about putting, let's say, 200 USD into the stock. Only problem is if the stock is trading at 800, let's say, and you invest 200, well, you can't buy 0.25 shares. Can't you? Or can you? Well, yeah, you can now with Admirals and the offering of fractional shares. So this is definitely something of higher interest. This is also true diversified portfolios. Again, Amazon, Google, probably two companies which you should look for in your overall portfolio. Only problem with those two, even though there was now a split announcement in terms of Google of 20-1, but when looking at Amazon, for example, you have a stock of 3,000 USD. So even higher price than Tesla. And but fractional shares deliver an opportunity to consider these stocks also in your overall investment plan. And this is exactly what today's webinar topic here will be about. So let me just share my screen, and probably here at this point, once you now within this live event, then feel free to ask your questions here in the chat box. I've already seen that there is a good afternoon. Great. Good afternoon. This is now from me. So this is where you can ask all your questions now in the live event. If you watch this on YouTube, don't forget to leave a thumb up here if you like what you're seeing. Don't forget to subscribe to the YouTube channel. Don't forget to set a reminder so that you don't miss any of the other webinars, which we are also producing for you here, not just on fractional shares, but also on trading strategies, trading psychological aspects. For example, the morning show together with Marcus. I was there in the morning, for example, as a short introduction, and Paul is also here next time this week on Friday. And long thing short, so if you have any questions, feel free to ask them below the video. Use the chance there, and we will be more than happy to answer them. What else? Well, I think this is it around the introduction. So today's topic, fractional shares at Admirals. What are they and how to use them to diversify your portfolio with them? I will also give an example with the MT5. I will show you how this works in the real world. I will also, where I invite you to head over to admiralmarkets.com, the website, and download a demo there, respectively register for their traders lounge, respectively traders room in this case. There you have a chance not just to download the platform, but also to get a demo on the so-called invest solution in this case. And you can here try it out risk-free and without having to pay for something, just to find out how it works in the real world. We will give you some insights here in the upcoming minutes too. Before we officially start, let's say, let's here first of all have a look at Admirals and the broker behind this hot webinar series here, the webinars which we produce within this industry now for 20 years. Started out as an FX and CFD broker, right now probably one of the biggest. This is especially important also when noting we're talking about fractional shares, because not all brokers offer that. It's most of the time you can say that only the biggest brokers really have the possibility here to offer fractional shares. And in this case, well, this is a clear sign, a clear hint towards Admirals being one of the bigger players in this marketplace. Has seen a rebranding taking place over the last year from Admiral Markets over to Admirals. Reason for that is that it's now not only, put this in quotation marks, FX and CFD broker, but it's also making its way into a global financial service provider. Here, for example, we now see a broker offering also physical shares. This has been the case for quite a while now, but also in addition to that, there's now, for example, a chance to get a credit card here, for example. You've also now the opportunity to how can I say that? It's in Germany, it's parken. It's like yeah, park your money, let's say, not just in a gold wallet, but also within the traders room. You can see that there, but also you have the chance now to yeah, let your money within your wallet being invested into, for example, Bitcoin or Ethereum, so other crypto currencies here, not just in gold. So you're not bound, let's say, to USD or euros. So long thing short, definitely worth a deeper look. admiralmarkets.com, further information, download the demo there, respectively register for a traders room and get yourself familiar with this offering. Fully regulated broker, licensed by SISEC, ASIC in Australia, also the FCA in the UK, for example. Very competitive offering. So I'm located in Berlin, in Germany. And usually we are here when talking about Admirals, talking about the so-called DAX expert with a very, very competitive offering, not just in terms of overall commissions / spreads. So when talking about the DAX here and using the, let's say, trader solution, you have the spread already included, the cost, the commission already included within the spread, but also in terms of reliability, platform stability, execution or speed execution of your trades. Then you have also the chance to reach out to the customer support in your native language. So with offices around the globe, chances are very high. I mean, we are talking English here, but still, for example, for me, it's not a big deal to talk about financial things, let's say, in English with someone. But given my overall experience in the retail business when I started out 20 years ago, I wasn't a trader right from the start, but I was a trainee with a bank, for example. I was working in the customer support of a bank. So what I can say is that if people have a question when it comes to financial related issues or questions around their account or whatever, they prefer to talk to someone in their native language. That's at least my personal experience. And so this is well, one of the main reasons why you should probably visit Admiral Markets and get further information on their product offering. One world, one broker. And now for today, the special slide, I forgot it last week on Friday, if I'm not mistaken. It was on fractional shares. I didn't include it in the last week's presentation, but today it's a must because it's today's topic. So you now have here the offering of fractional shares. to diversify your portfolio and invest in stocks, in fact, from just €1. And it doesn't really matter what share price you're looking at. And this is exactly what today's topic is about and what we now want to dig deeper into. So today's agenda is about fractional shares, what they are. And also, I want to give you some real world examples where you are confronted with these, for example. Fractional shares in the real world when it comes to so-called dividend reinvestment plans. This is very interesting because you might be invested in companies which are paying a dividend. And then let's say, well, we have an example with Bayer a little later, but now you have the money being transferred to your account, and then you want to reinvest dividend because you say, well, it's nice to have the cash flow, but right now, let's say you have this dividend investment plan in this case, but you're still working. So the cash flow generated here out of your financial investments is not needed for you to keep your overall living standard. You're not yet retired. And so you say, well, I reinvest the dividends. The only problem is that sometimes you probably receive a dividend which cannot be fully reinvested then in stocks if you do not have the option to use fractional shares here. And this is something which is very, very nice because you now can say, let's say I buy with the dividend 10.3 Bayer shares on top out of the dividend, which was just transferred to my overall account. So that's what we want to look at. Also, we want to give a look here at stock splits and how fractional shares occur here in the real world. And then finally, we also want to dig deeper into the question, because now we might say, well, okay, nice fractional shares, but is it really of interest for me? I'd give this a yes, 100%. And why this is the case, this will be the last bullet point of today's presentation. So first of all, let's start out and have a look here on the question, what are fractional shares? So what are fractional shares? As the name suggests, it's a fraction of a share. So for example, it's 0.5 Tesla in this case. There can be plenty of reasons how such fractionals can arise. For example, from a stock split that do not always result in an even number of shares, for example, or if there's a merger and acquisition taking place where fraction of shares are created when companies combine new common stock in a predetermined ratio. So these mergers and acquisitions happen all the time. You probably have just recently seen that there was this merger, respectively, this acquisition of ATV. So this is the ticker symbol. It's Blizzard. Activision, I'm sorry, it's not Blizzard, it's Activision Blizzard, I'm sorry. The company was acquired from by Microsoft in this case. The question arises, why is this the case? Because you probably have heard about Activision Blizzard in some way or the other. It's the company which is standing behind games like World of Warcraft, for example. So that was a very funny coincidence. When I went to breakfast one day, I was talking about this merger for whatever reason. I'm not really sure. Talking to my wife about this, probably telling her probably this is of interest today because it seems as if ATV then is hot today. Probably I will give the stock a deeper look. And I was talking about the merger, and then she just looked at me and said, yeah, I know the company. This is the company behind World of Warcraft. So usually my wife does not have anything to do with trading or with financial companies or something like that. But in this case, she knew the company really well due to the fact that it's that she was playing World of Warcraft, in her earlier life, let's say. And in this context, then that was something which struck my mind. And then I started to discuss with her also why this is probably taking place. And most likely the reason is that here we are seeing this acquisition from Microsoft because Microsoft wants to position itself in the let's say metaverse space in a very attractive way, and this acquisition seemed to make sense then based on that. And probably there will be other acquisitions in the future here where fractional shares could occur then, for example. So it could be that a company like Roblox, which just went public last year, I think in March, if I'm not mistaken, so nearly 1 year ago, could be acquired from another company whoever that might be, but Roblox is probably also a candidate for such a merger. Also in the electric vehicle space yesterday, or was it the day before? I'm not really sure. I think Monday after markets closed. I'm not sure. Lucid released earnings. Lucid is also active in the electric vehicle space. And there's speculations right now that probably Lucid will be acquired rather sooner or later from a company like Apple. Well, because Apple plans to position itself then in the electric vehicle space and probably build a car, which is then acting as kind of a direct competitor to a Tesla, for example, whatever that might be the reason. So this is just some thoughts you might have a look at in the future, because you thought, well, which companies could be of interest? Lucid is one, Roblox is probably also a candidate. But if this acquisition happens, then fractional shares could occur. And so the reason for that could be, as I already said, it could be that the new common stock in a predetermined ratio results in fractionals, which are then booked into your trade. If this is not offered by your broker, then you sometimes see that you're getting the difference here being paid in cash to your account. And this is, well, it's okay, because then you use the money and you buy another stock or something like that. But sometimes you just say, well, I'd really like to be invested with this amount here fully into the stock. I want to see continuously interest, or I'm invested in this company, and this might be the reason why then a broker offering fractionals like Admirals is of interest for you. Even savers here can find fractionals in their portfolio from time to time. If you invest, let's say, 100 euros a month here in a share that is listed at 200 euros, you buy 0.5 shares. So in the morning, for example, I was reading a tweet from someone who is the CEO of a company which is publicly traded, and so he was talking about one of his employees buying shares. So the only thing is, let's say you're an employee, you get, let's say, 2,000 euros a month from your employer in this case, and then you say, well, I want to invest in this context, let's say 200 euros each month, and the stock is trading at 52 euros right at that time. Once you plan to invest it, the problem is that can only buy 3 shares this month, 200 euros, because with 4 shares, and you want to invest 200, well, you can see that you then have to fill the gap yourself with more money to be invested. And then in this case, you have to enter 4 times 52, it's 208. And this is a problem in this case. If you say, I want to just save 200 euros and your broker offers fractional shares, you can then see it's 200 divided. Let me just here use the calculator, by the way. So you have then 200 euros, you divide it here by, let's say, 52, you have 3.846. So in this case, you round this up and, well, round it down, whatever. And then you say, well, I invest now 3.8, or I buy 3.8 shares in this context. And this continues to build over time then, with you saving 200 euros each month in your company you want to invest in, for example. And the thing is now, usually these, not just usually, but in general, these fractionals are not traded on an exchange, but large brokers offer their customers this service to give them the opportunity to also profit even with smaller amounts than the stock is listed at the exchange. And as I already said, this is usually an offering you get to see from big brokers. And in this case, now Admirals is offering it. So if you have ever wondered, is Admirals a big broker or not? Well, obviously it is, because else it would probably not make the step over to fractional shares. So now I just wonder if I should continue right here with dividend reinvestment plans, or if we should just head over to the platform. And you can see here already. So this is an example I made several weeks ago, 2 weeks ago, something like that. In ALV, this is Allianz, the German insurer, and here you have Tesla as an example. And there, I just bought 0.5 Allianz, respectively 0.27 Tesla in this case. Since we are looking at buyer, let me just add buyer here to this account. So it's buyer. Where do you have it? It's just right here, the first one. And let me just bring it over here. So let's buy buyer in this case, and I just want to show you how this works. So we open here the order window. You could also do this with the mini terminal, but let's go let's call it the classic way. And then you can here say, okay, it's the exchange execution market, so we're buying that, and then we buy. Well, what do you want to invest here? So it's like let's say we buy 2.52 shares of buyer. And we just buy it. So this is the only thing what you do. So it's not that you're buying 2 or 3, but it's buying that you 2.5 and then take it from there. You buy it, and you can see it appears here, and you just invested around. Well, let me just calculate this quickly. It's something like 150, 125, 30, something like that, and that's it. So nothing more. So this is no rocket science or something like that. But let me just now here use this as the introduction to this slide, which I already opened here, the dividend reinvestment plan. So why did we look at Bayer? Bayer is a very interesting company because it pays a quite high dividend, personal opinion at least. So it pays €2 per share here in this case. And so as you can see, so it's at 52.9. This is very interesting. It was February 8th, so it's nearly 1 month ago. This is also one thing why Bayer is very interesting, because you can see here, Bayer is currently trading higher, 80 cents, despite all the turbulences which we got to see over the past month. So this is something which is very, very interesting. So it's not a beta stock like a stock which is moving aggressively on the up or downside, like a Tesla, especially right now, a growth stock, but it's a stock which is like quite stable, and which can be very attractive in terms of the overall cash flow it can generate. So now the thing is, this might be the case. So you probably said, well, I just bought 100 Bayer somewhere in the past, and then you get the dividend of €2 per share getting paid to your account. And well, as I already said in the introduction to this video, well, you really want to directly reinvest here the dividend, because you have another source of income. You're still an employee, or you still have something you can use as an income source to pay for your overall living standard, while you plan to take these dividend payments then in the future, once you're retired, to then finance your living costs in this case. So now you say, okay, I'm getting 100 shares with €2 per share dividend. This is great. So I'm getting €200, and now I want to reinvest those €200 directly. And you see, okay, 52.9. Well, this is 3.78 shares. So you can either buy 3 shares, or you can buy 4 shares by you saying, okay, the difference is in this case something like €20 or so, and I then put it on top. Oh no, yeah, something like that. And then you buy 3 or 4 if no fractionals are offered. So in this case, a broker not offering that, that's a decision you have to take. In case here with Admirals, as I just showed you, it's not a problem, because you can now easily say, okay, I buy, in this case, 3.78 shares from Bayer. And after I reinvested the dividend, I then have 103.78 shares in my portfolio, as you can see here. So in this case, you can see here the volume, 2.52, same idea behind this. So you just reinvested the dividend. By the way, 1 second, before we now continue to go here to the next slide, and the stock split I prepared here for you, let me just check my stocks which I'm currently watching for today. So you're probably we are talking about investments today here in this webinar, but I could imagine that trading wise today, there's also 2 stocks which are very interesting. One especially, It's Sophie, but it's also Pluck after the earnings yesterday. So, and what I do here, as I usually do, I write down the gap and how much volume is traded in the pre-market, which I then use to be fully prepared once the market opens. And once we ever end the webinar, and I can straight away jump right into the action and be aware of what's currently going on in the stock. And then after that, if I do a trade, so it's not said that I will do a trade, but if I do one, then I have the chance to give it a deeper look afterwards and really see what went well, what didn't went well. And I have my daily routine I go through every day. But let's come back to today's webinar, fractional shares in the real world. And here the stock splits and the stock split example. So let's assume you've probably heard it after very strong earnings from Google. That was at the beginning of February, 1st of February. Within this very strong earnings release, and I think also quite solid and strong guidance Google delivered, there was also the announcement that there will be a stock split from Google from 20 to 1. So what does this mean? If you let's say see such a stock split happening, it means that if you, let's say, have 10 Google in your account, then after the split you now have 10 times 20, so 200 Google in your account, while the stock price is then divided by 20. So it's not that your overall exposure in terms of position increases, but the stock is also trading lower than at a divided by 20 point. In this case, if the stock is trading, let's say at 3,000 USD, you divide it by 20, then you are at 150 or so. That will be very interesting, by the way. So I think it will be in the mid of this year, I think somewhere in June or not, if I'm not mistaken. And it will most likely result in Google seeing significant increase in volume, because now also retail traders potentially think that the stock is getting interesting again, or more interesting now to trade it intraday wise. And there will be heavier and very interesting swings probably developing, especially if earnings are released or if there's some kind of mergers with other companies, whatever. Still, you also had already or have the chance with fractional shares, if you say, and that was the example I brought up at the beginning with a Tesla, respectively. You can also go one step further, look at an Amazon trading around 3,000 USD per share, Google, for example, that you say, well, if a stock is trading at these levels here, well, it means that if I say, I want to invest 200 euro a month, you can then say, okay, I divide here the 200 by, in this case, 3,000, the stock price, and then you're at 0.06, 0.07 shares. You can buy and invest in Google, and thus use here the fractionals to diversify your portfolio. I will give a more detailed example, by the way, in the later part of this presentation. But there's also other occasions where this is happening. So stock splits, for example, sometimes you see, in this case, it was a stock split of 20 to 1, but sometimes you get also so-called odd stock splits. So like a 3 to 1, 3 to 2 in this case. So, and this could result in you now getting fractionals in your account, respectively. If the broker does not offer fractionals, you probably get the cash equivalent transfer to your overall account. So it could look like the following. So you say here, you have a company which is announcing such a stock split of 3 to 2, and then you have 53 shares of this company, and it's then in this case that you say, well, if I'm now multiply here the 53 shares with 1.5, I'm ending up at 79.5. So which means like a broker which is not offering fractionals will give you 79 shares after the split, and the 0.5 difference will be forwarded in cash to your account. And then you can use this, you fill it up yourself, and then you can buy another stock that way. Problem with that is that, especially with brokers who are not offering something like Admirals does, where you can have one trade per day in the physical environment and 3 full turns, or round turns in this case, in the CFD world, where you can, by the way, also buy fractionals, you have to pay commission for that. well, it's not a huge deal. In case of Admirals, we're talking about one USD in this case. If you invest here in this small environment, let's say, or in this small world, but still it cannot up. Sometimes it cannot up if these splits happen, and it's a bite in your performance. It's something you can avoid. In this case, it's not happening because if you have a broker offering you fractional shares, well, you get 79.5 shares booked into your account, and then we take it from there. So that's it on the fractional share side here when it comes to stock splits. And so now I've also something here, which is just 2 bullet points. I think it's not such a big thing. So mergers and acquisitions, as I already said, ADV, for example, where we also sometimes have acquisitions probably ahead of us when it comes to Lucid, probably Roblox. Let's see how things play out here. Mergers and acquisitions here can sometimes create fractional stocks as companies combine new common stocks in a predetermined ratio, as I already mentioned, and the ratio can often result in fractions of shares for shareholders. Again, it's no big deal. It's not happening that often. Sometimes an investor might say, well, after the acquisition now taking place and me making some money on this deal, let's say, I now sell out the position to the acquirer, let's say, in this case, because now I don't want to be invested anymore. Probably that was the idea behind the trade, whatever it might be. If you want to stay positioned in this trade. So, for example, I really well remember, I think it was 2005 or 2006. I'm not really sure. I was still then with a bank back then. And I was in a wealth management department, and that was the time when Bayer, the company we just used here as an example, were announcing an M&A deal with Schering over here in Berlin, especially. So they bought the company. And now people might say, well, I made some good money. So probably it was an employee over the years, was also getting parts of his salary being paid in shares as a part of his compensation plan. And then he just says afterward, well, I want to sell out the position, as one client, for example, did. So he made a really huge amount of money. It was really crazy once the announcement was placed, and he was already a big client before, also trading options, for example, using the possibility to short options, for example, and write calls in this case on a position he held in his account. It was especially in Daimler back then. It was also generating a quite huge cash flow that way. And if he woke up on the wrong side of the trade, let's say, he had no problem to deliver the shares. This is part of this covered call writing, we call the strategy. But this guy just sold out his position then. So he was a former employee of Schering in this case, and then just said, okay, I give it. There was no fractional shares taking place, but just a story which comes to my mind when I think about these mergers and acquisition taking place in this world. And we now want to focus, in fact, on, we want to focus here on the question, why fractional shares are of interest for me? Because right here at this point, you might now say, well, okay, it doesn't look that complicated to buy fractionals here. So that was quite easy. You probably feel reminded when it comes to, let's say, buying fractionals in terms of CFD. So if you traded the DAX ever, and you say, well, I don't want to trade here one DAX CFD in this case, you can also trade, let's say, 0.3 DAX CFD. This is very great from a risk management perspective. You can scale down your position, and the fractional shares seem to be the equivalent here. So this is no big thing. So why should this be of interest for me? And I think the main reason is, especially given the overall developments we currently get to see around the Ukraine, and you probably have also seen inflation fears already picking up. So way ahead of this development, and now this crisis being used from government officials, respectively central banks, then to scale back on the expectation market participants had in them to raise rates. So, and quite quickly to fight inflation. Now they somehow seem to stand up and then to say, well, we see inflation, and let's look at it from a quite directive perspective. So if you have a high inflation here, and you have a big debtor, let's say, like Germany, the German government has a load of debt, in fact, respectively the US. Well, what you want to see is inflation, because inflation is eating away the debt in this case. So and then you're fine with that. You're fine with seeing inflation. The only problem with inflation is that on the other hand, the creditor is losing his part of his assets, right? And if you're the creditor of, let's say, Germany in this case, well, this inflation is eating away the potential money you will receive here in this case from the government for lending your money in terms of a bond, for example. Here the government gives out here to finance whatever infrastructure project and so on and so forth. And so the thing is now that stocks, they have been and they will continue to be without an alternative, especially in my world. So right now, the Ukraine crisis is used from market participants to say, not market participants, but governments, respectively, Fed officials, ECB officials, to scale back in terms of the rate hike expectation, because they say, well, we can't hike rates in this environment. Yes, there's inflation, but well, probably this is the price the overall population has to pay for, well, as an act of let's call it solidarity with the people in the Ukraine, let's say. And that's why we can hike rates here, because we have to support our overall economy, because we can foresee what will happen in terms of, let's say, here the developments in the energy market. So yes, there will be price pressure and it continues to build, but there's no other chance for us. I think that's a very difficult discussion, let's say, and also probably it's some government officials, let's say, they're probably very thankful for what's currently happening, because they can use this as a reason to tell the people, well, we can't hike rates. So if you can't hike rates and inflation continues to rise and price pressure continues to build, well, what will you do with your money? I mean, you can certainly keep it in your savings account. The only problem is inflation will eat it away. So this is probably not the best choice. And that being said, brings us then here to investments in stocks in general, saving plans which are looking for investment in the stock market, but with some stocks getting more and more expensive, especially those which are probably leaders in their respective field. Let's have a look at Google as one example. Let's have a look at a Microsoft trading around 300 USD per share. Apple has seen several splits in the past already. Again, trading up to 160, nearly 200 USD per share. Tesla, for example. So all these players, they are, well, at least in my personal opinion, and roughly speaking, I think they need to be part of a well-diversified portfolio you want to build in such an environment. But the problem is, if they are so high priced as they are, and you just say, well, I can afford to save some money, but I have a max savings amount per month of, let's say, 200 USD. Well, then you have a very, very difficult choice to make in which stocks to invest. Respectively, you can only choose those which are not trading above 200 USD per share, let's say. So, and that being said, now with fractionals being offered, there's a great way to overcome this problem. So you can build a personal, let's call it investment portfolio, investment plan, and let's say you wanna invest now. In this example I've put up here, you want to invest some of these. In this case, what did I say? 500 euros a month. So probably it's a little too much. Probably 200 USD. So then you have to change the numbers. But let's say it's 500 euros a month, and you want to invest it, and you say, well, Nvidia is a great player, probably. Speculation on the developments in the metaverse and Nvidia here being a great candidate to continue to grow. And then you want to also invest in Tesla due to your overall outlook for the overall outlook for the electric vehicle sector. And now you have a stock of 240 USD in case of Nvidia, and you have a stock which is currently trading around 900 USD, and Tesla. But you want to invest in both of these stocks because you want to diversify your portfolio. And then with fractional shares, you get a solution. You get a potential solution to this problem. The question you have, you can buy 1.2 Nvidia, you can buy 0.3 Tesla, and get the job done, let's say, and invest and respectively diversify your portfolio. So that's the reason why fractional shares are of interest for you, and why you should definitely consider here at least downloading a demo here at Admirals, and get yourself comfortable with this. Probably think about this a little, and then think about investing part of your savings plan, where you will probably have no other choice than to think about this with inflation running high and hotter and hotter and hotter, and no central bank around the globe, especially the biggest here in Europe, ECB, and then the one in the US, the Fed, not doing anything against a rising inflation. For whatever reason, they will bright forward, but at the end of the day, it will eat away your potential savings. And this is now the opportunity here to invest, diversify in a smart way with fractional shares in this case. So let's sum this up. Fractional shares are a fraction of a share. Well, this is no big surprise, and fractionals are particularly interesting, as I pointed out, for savers who want to diversify with smaller sums. Fractionals come into play, especially when it comes to dividends, reinvestment plans, or stock splits. That might also be of interest for people investing in stocks which are not that high price, but still get a dividend, which they want fully reinvested then in this respective stock, or in another stock. That could also be certainly a solution. And fractionals are offered by major brokerages like Admirals. So if you ever wondered, is Admiral a big broker or not? Well, the offering of fractionals gives you a good idea, because it's usually something you get to see at bigger brokerages. And so the answer should be questioned. The answer should be given in this case. So that's it around today's topic. As I already pointed out, so last week I forgot to include the slide. This time I have it twice. So it's now offered at Admirals. Check out the website for further information on fractional shares. If you have any questions on top of that, feel free here also to reach out to Admirals directly. At the end of this webinar, if I'm not mistaken, I think there's also a small poll, by the way, that has nothing to do with fractional shares. But if you could give a feedback with how you liked what I presented and how I did it, and so on and so forth, it would be much appreciated, because it gives us a chance to also give you then further details on topics you're asking for in the future. So this will appear right after this webinar here ends. So contact details from Admirals in this context. So YouTube channel, subscribe to it. Also reach out to Facebook if you're active there. Send an email. And as I pointed out at the beginning, fully regulated broker. So here's the risk disclaimer. Please read it carefully. And that's it from my end. So I hope you enjoyed the webinar as much as I enjoyed to prepare it for you. And we talk again then next week on Friday again. I really look forward to it. Wish you a nice weekend. Happy weekend. Enjoy yourself. Talk to you next week. All the best. See you. Bye-bye.